Hey everyone, Couch Investor back to another video for you today. So let's talk about Tesla. Now that Elon Musk has officially taken over Twitter and thrown out the garbage, the Twitter overhang has lifted, according to Gary Black, who has been trying to sell you some merch with a nice little bird and design, which in itself is a bit weird, right? Managing partner of a fund trying to sell you some t-shirts. I mean, I know the times right now are tough, but come on. Obviously, jokes aside, let's talk what is going to happen right now. I'm going to show you a couple of tweets from Gary, from some other people on Twitter as well with regards to Tesla. We also have some important events coming up this week and next week as well. This week, on Wednesday, November 2nd, we have the FOMC statement, then Fed interest rate decision, and obviously the FOMC press conference. The forecast is obviously 4%, which means another 75 basis point hike there. But the real question is what happens after that? Do we see another 75 basis point hike, or are we going lower? Remains to be seen, because 1 week after that, we have the CPI report. And if that comes in lower than expected, maybe that might impact the Fed's decision. Obviously, we have another meeting in December, so we still have some time. Well, they still have some time to discuss it. But it's also, what's going to happen with the overall market, especially growth stocks? Will the market go up or will the market go down? It doesn't really matter what happens with a specific company, because if they raise interest rate by 75 basis points and then they say, well, we're not going to slow down, expect the market to crash. Regardless of what is happening next week, you could be reporting earnings, have a huge beat, doesn't matter, you're going to crash. But if there is a Fed pivot, then the market will probably turn green. Remains to be seen. And an extra thing here, I would really appreciate it if you could hit that thumbs up button and subscribe if you have not. Also, this video is sponsored by Seeking Alpha. If you click down the link in the description and in the pinned comment, you will get 50% off your premium subscription. So 50%, not too bad. And so I will show you exactly why you should consider maybe using Seeking Alpha. You can use it for free, of course. You can also use it in the premium version, which unlocks a lot of value. This is basically my portfolio on the website where I can follow all of these companies. Gives me some metrics that I've put in there. You can choose whatever you want. And then you have the ratings, the famous ratings, Quant, Seeking Alpha authors, and then Wall Street. But what's also very useful, especially during the earnings season, you go to the earnings tab and then you see exactly what day they're going to report earnings, before or after the market opens, the EPS estimate, revenue estimate, and then the revision grade. It's always nice to know, because when they come out, obviously these numbers here get updated. You can compare it pretty easily. But since we're talking about Tesla, let's look at Tesla. So the factor grades here, to be honest, unchanged from the last time we looked at it. So valuation still an F, because it is looking at traditional metrics. So yeah, still a, let's say, high PE, because yeah, a company that is growing at Tesla's speed, having a forward PE of around 40 to 50 is not good enough. But then again, we know that, these traditional metrics don't really always work. They do work, but they're not always as useful. And then for the rest, basically the same. So growth, an A, profitability, A+, momentum, C-, which is a bit better than a month ago. But 3 months ago, it was an A. Of course, since then the stock was down, is down 30% or so. Then revisions, A, B. So really unchanged there. We can actually see the changes right here underneath. So the only thing that really changed that much is momentum. We can see it, a couple of days ago was a D+. Then right now changed to a C-. If we can continue to go up and there really is, let's say, a lift in the Twitter overhang, then maybe this might be upgraded to a B, B- or something like that. And if you remember, a couple of weeks ago, I did a video saying there is a red flag with regards to Tesla stock, which was obviously the Twitter lawsuit, not the Twitter deal. Obviously it's all together the same thing, right? But the Twitter lawsuit, which meant maybe Elon would have to sell more shares. Right now, it looks like he did not have to sell more shares, which is a good thing. Again, we might never know how this deal was done, well completed, but as of right now, no filings have been made. We probably didn't sell any more shares, so there is that. But now, let's have a look at, well, Gary Black. So he wrote here a list of catalysts for Tesla. So Twitter overhang lifts in October. Well, we all know that happened already. Then for the fiscal year 2023, EPS revisions in Q4, new gigafactories in the UK and East North America, maybe even Canada, who knows, that's also in Q4. What's also in this quarter, well, is FSD beta wide release. We know this is already going to happen because that's what they mentioned during the earnings call. Then at the start of next year, we have this 7,500 EV credit that will come into effect. Then a probable Tesla $10 billion buyback, one time or maybe a yearly thing, remains to be seen. Towards the end of the year, I would say we have the Cybertruck launch. And then number 8, he mentions there the $30,000 EV launch mid-fiscal year 2024, which, well, remains to be seen what happens with that. Obviously, the announcement for that would probably be next year already, because a launch in 2024 about a vehicle we have never heard of is a bit far-fetched. And then he ends with his price target, which by now I think everybody already knows, $550 in the next 6 to 12 months. Next up, we have a reply here on Gary's tweet with regards to, well, the non-filing of any Form 4s, which he says, well, will be another strong catalyst for Tesla, blah, blah, blah. So, Major here says, in other words, there is no Twitter overhang. Why does he say that? Because he said this: may the disappointing aftermath of the stock split euphoria and Twitter overhang hopium experience be a teacher on what drives stock prices. Only 3 factors drive returns. 1. Short-term macro, long-term growth, return on invested capital, buybacks, dividends, and 3. Special situations, M&A. That's it. Which obviously I would have to agree with him. I also agreed that the whole Tesla situation, especially the lawsuit, did probably affect Tesla price, especially since, well, the overall market thought that Elon would be forced to sell more shares, which again is a short-term issue. Long-term, all the 3 points he mentioned are correct. Lastly, we have some good news with regards obviously to China. Tesla there has reduced their prices for a couple of vehicles. We've talked about that with Best in Tesla. If you have missed that video, that's going to be in the top right corner. So we have this tweet here, right here from Andrew Hung. So Tesla China orders skyrocketing. Even car show host knows price cut is a strategy to boost Q4 for annual delivery target. SH, I would assume it's Shanghai, but okay, let's call it SH Consumer Protection Department, also knew and said no more subsidies from government next year. Price will go up again from 9,000 to 12,600 from 2023. To that, Troy Teslack, by the way, I just found this out last week, he does not even own any Tesla stock. He just likes to follow the company, which I was very, very surprised to hear. So basically, he said here, it looks like the Shanghai Consumer Protection Department. So yes, SH is exactly that. Should have read this before. So that Consumer Protection Department inadvertently helped Tesla by confirming the subsidy ends on December 31st, so the last day of 2022. This is great news for Q4 because potential buyers don't want to miss out. And so, my dear friends, remember when they said there is a demand issue for Tesla? China is crumbling with regards to Tesla's demand. Well, I guess it was false. Who would have known? You? I don't know. Well, not me. Probably not you who has been watching Tesla Daily and other Tesla channels out there as well. Tesla has no demand problem. Every car they produce gets sold. Today, tomorrow, next week, next month. Months, should I add. And so, Twitter overhang lifts I don't know about that, but Tesla, the stock, is probably very, very cheap. Of course, the macro will affect the market next week and in 2 weeks, maybe in December as well, the last meeting of the year. We should see if the Fed wants to destroy the market a bit more, or maybe they have reached the conclusion that, we were late to tackle inflation last year, and today, we are mistaken by increasing it like a bunch of clowns a bit too fast. So that will be it for this video. Obviously, do share your thoughts down in the comments below. Twitter overhang, yes or no? What might happen with the market? What will the Fed decide? Let me know down in the comments below. And if you enjoy this type of videos, leave a thumbs up. And if you haven't subscribed to this channel, maybe hit that subscribe button. And I'll see you all in the next one. Bye bye.